Hey guys, Britt here. Welcome to End Times Bible Prophecy. Make sure to hit the subscribe, like, share, and restack buttons. Well, this is the epicenter of an emerging global collapse. What am I talking about? Well, I'm talking about the global economic depression we're currently in the very early moments. This place is the epicenter. Exactly where? Get to that in just a second, but first I want to turn your attention to this. Just as a reminder, tonight at 7 p.m. Eastern Standard Time, we'll be doing a live prophecy roundtable. Includes John Haller, Pastor Tom Hughes, Patrick Wood, Scott Townsend, and myself on a whole range of different topics. Done several of these before, and they've been very popular, it turns out, so make sure to tune in if you have a chance to, live at 7 p.m. Eastern Standard Time here on YouTube. That's where this will be, and you can join the live chat if you're in there live. Jenny will be in there. You can talk to her as well. And if you missed that, if you're not available at 7 p.m. Eastern Standard Time, then the recording will be available to check out afterward for as long as it's up on YouTube, I guess. So, back to what we're talking about. This is the epicenter of the emerging global collapse, the economic depression we're in. What am I talking about? Well, I'm talking about China. So China is ground zero for this deflationary spiral we're seeing play out. And why do I say deflationary spiral? That is what we saw during the Great Depression. We're seeing the same thing play out around the world today. It hasn't hit the United States full steam ahead yet, but we've seen it hit Germany and China particularly hard. So let's start with this right here. This is from the Kobayashi letter. It says, China is in an economic death spiral. Today, the yield on their 10-year government bond fell below 1.6% for the first time in history. And this is from Friday, January 3rd. Even as China rolls out pandemic-like stimulus, their real estate market is weaker than 2008. Has China's recession begun? And we've talked about this in the past. Good portion of the end of last year. Yes, not only has a recession begun, but China is in a depression. Now, they can lie with government statistics, but we could read all of the stories about young people having to leave cities and go back into rural areas. They're unemployed, and they call it, we're vacationing and finding myself. And it's, no, you're unemployed and you're moving back home to your parents' basement. That's basically what those stories were. It's not a sign of economic vitality. That's a sign of economic problems and issues. This goes on. It says, for some background, here's China's 10-year government bond yield. It's now down more than 100 basis points in 1 year and moving exactly opposite of U.S. rates. As the United States deals with inflation, China is dealing with severe deflation, which is arguably even worse. And that is true. I would argue that deflation is preferable to hyperinflation. We haven't seen hyperinflation in the United States or China or many of these other major economies yet. But one day that will come. It's probably far off in the future, fairly far off in the future. Prior to that, it's going to be deflation, which again, we are seeing here. We've been saying that for 2.5 years now. We've been seeing it play out in China for at least the last year, and it's just getting worse as this shows. It says, in fact, the U.S. versus China 10-year bond spread is now at 296 basis points, the largest difference in history. This means investors can obtain nearly 300 basis points or 3 percentage points more for a, quote, risk-free investment in the U.S. over China. Who would ever choose a Chinese government bond? We'll get to that in a moment. It says bond yields don't just fall off a cliff like this when things are normal. Investors will point to the 5% GDP growth in China for reassurance. And let me let you in on a little secret. China lies right about their economic statistics. We've seen that here in the United States where, oh, we've had robust jobs growth. And then they come along, oh, well, you know, there was like 1 million jobs we said that were created that really weren't. And then a couple of months later, oh, you know, there was an extra 580,000 jobs we said were created that really weren't. Right? And that they'll tell us inflation is 3.2%. You're like, you know, I went to the grocery store and it's 20% more than it was a year ago. That's not 3.2%. So in the United States, in almost every nation, they lie about these statistics. It's particularly true in China. So China isn't growing at 5%, even though they may claim that. The question is, how accurate is this number exactly? And can the economy really grow 5% a year in this environment? Something is off. And I would say that it's the false government number of 5% growth. China's real estate crash, and this is hard to fathom. I'll let this sink in. China's real estate crash has destroyed 18 trillion, with a T, $18 trillion of wealth since 2021, according to Barclays. So to put that in perspective, that's probably like 2/3 of the economic output of the United States in a given year, just wiped out from people's net worth. $18 trillion. It says their high yield real estate index has dropped over 80% from its all-time high. Home sales are down over 50% in just 3 years. How can GDP grow 5% per year in this market? Well, it can't. It's a lie, right? They're just making up these stats. It's not true. In a last-ditch effort, China began stimulus in the third quarter of 2024, cutting reserve requirements by 0.5%, cut the 7-day reverse repo rate by 0.2%, lowering mortgage rates, injecting $142 billion into banks. We'll look in a moment, it's much higher than that. Implementing forceful, quote, forceful rate cuts. We questioned if this would be a long-term solution. Simultaneously, China is stocking up on gold, leading to record high prices, even as the US dollar rises. As a result of widespread stimulus, China's budget deficit is set to hit 4% in 2025. This would be their highest annual deficit since a major tax reform 30 years ago. It would also break Chinese policymakers' tradition of capping it at 3%. This is not a normal economy. Even more alarming, China's private sector debt as a percentage of GDP is now above 200% for the first time in history. This is around 70 percentage points higher than the peak of the 2008 global financial crisis. By comparison, this metric has fallen by 20 percentage points since 2008 in the United States. So, hey, one area where the United States is better off, right? It says adding in upcoming Trump tariffs on China, we'll see if those play out or not, or whether they're just threats for negotiation, and their economy is in even more trouble. In early 2024, Trump pitched a 60% tariff on all Chinese imports. That would shrink a $575 billion trade pipeline to practically nothing, Bloomberg analysis shows. The economic swings coming in China will not be isolated and are not. They will impact global equity, commodity, and bond markets. We expect more volatility as China attempts to rescue its economy. Lastly, yesterday, again, this is from Friday, China began the year with a 2.9% drop in its stock market. This marked the largest drop on a first-year trading day in 10 years. Investors in Chinese assets are looking to de-risk. So we see, again, more volatility as China attempts to rescue its economy. This is not a healthy economy. We're seeing these measures being undertaken. We've talked about in the past. Read history. Read about the Great Depression. You'll see that the same things are happening today. The same attempts by governments are being made today to rescue the economy as were made back then. They failed then. They will fail this time as well. About this, we had this tweet from Kyle Bass. For those that don't know, Kyle Bass became famous as an investor during the Great Financial Crisis for correctly, accurately predicting the fall of the residential real estate market, subprime, and made a lot of money for those who invested with him. So that gives him credibility when he says these things. He says, China's economy is experiencing its largest financial collapse since its 2002 emergence into the World Trade Organization. 10-year Chinese government bonds now yield 1.75%. And this is from back in December. And 30-year bonds are also below 2%. So both of those have gone down even lower. Banks are insolvent. So that's something we need to note because we've been talking about the global banking crisis, what we saw during the Great Depression, what we're going to see here with bank failures. And leverage is 350% of reported GDP. So we're seeing troubled banks in China. So let's take a look at this Zero Hedge article from Thursday. It says, a bit troubling, Chinese stocks suffer worst start to a year since 2016 as, quote, Trump effect looms. They just talked about this. But let's dig down a little bit into the story to find out what's really behind that. 2.9% drop in the market, big deal. There's something far worse simmering underneath the surface. It says the biggest free fallers were the big Chinese banks led by major declines in Agbank, ICBC, and CCB, which leads us to ask, as Christopher Balding questions at the Epoch Times, just how dire is the situation for Chinese banks? Lost amid all the different announcements of stimulus and busy work made to appear like stimulus. Again, we saw the same thing during the Great Depression. We saw a bunch of government programs that built valuable things like dams and bridges, infrastructure projects, roadways. And then we saw a lot of stuff that was just busy work that had no economic value whatsoever, except it helped the politicians say, we're trying to look at what we're doing. We're providing jobs for people. But there was no economic value behind those that actually prolonged the Great Depression. You're seeing the same thing here in China. It says, Beijing rolled out small programs to boost consumption and help local governments start investing again, but the biggest funding items prop up bad banks. All this funding for a sector supposedly with low levels of bad loans forces the question, how bad are Chinese banks? It says, recent funding behavior by Beijing paints a worrisome picture. Within the past 3 months, Beijing announced a potential bank recapitalization totaling as much as $415 billion. Though no official reason is given for why China has been spending such large sums of money regularly on shoring up banks, the official whisper campaign is that in 2025, Beijing will unleash stimulus forces to get the economy going again. While anything is possible, it seems much more likely that Beijing is simply trying to fend off deep financial problems in the banks that keep funding everything they're told to fund. Beijing has already announced it will start releasing restrictions on local government debt levels with heightened expectations for stimulus in 2025. At the recent Central Economic Work Conference, they shifted from prudent to ease. You gotta love these central bank. The language they use were easing, were prudent, were, all these different words they use to talk the markets in a certain direction. In the end, the market's ultimately going to do what it's going to do. It says, hearkening back to language not seen since the global financial crisis in 2008. this may be true, but bank lending in November and December is below trend. That's what you expect to see in an economic environment like that. In the Great Depression, you have banks, maybe they're willing to lend to credit-worthy borrowers who have collateral to back up those loans they're taking out. But those credit-worthy borrowers look around and say, there's nothing I want to invest in. There's nothing I want to borrow. I'm not going to expand my plant when we're laying off workers. So the credit-worthy borrowers generally say, I don't want to loan. And the people that want to loan are generally the people who are destitute, and therefore the bank is not going to want to lend to them because they're not going to be paid back. So this is exactly what we would expect to be seeing. Below trend lending, problems at the bank. It says, while this may be storing up the ammunition for a 2025 rollout, it seems entirely possible the banks are just in bad shape, and the regular market expectations of Beijing's stimulus will once again prove unfounded. If China unleashes enormous physical stimulus in 2025, then there is some logic to the recapitalization splurge. Otherwise, this seems more about quietly staving off a financial crisis. That's exactly what it is. It says, given the regularity with which Beijing has disappointed the hopes of investors calling for stimulus, it seems like the better bet is not to put your money in a Chinese bank. Because deflation has taken hold in China. Once that happens, it's almost impossible to turn around. You simply have to let market forces take their toll, reach an equilibrium, and then start anew, afresh from there. So this is going to take down a lot of banks in China. As it spreads to the rest of the world, it's going to take down banks all across the world. But this is more than just a banking crisis, and it's more than just a stock market bubble, residential real estate bubble, commercial real estate bubble, as we talked about on Saturday's video. It's about a sovereign debt crisis and ultimately a currency crisis. And that's why this is going to be the biggest financial crisis in history as we see this unfold. We can get a glimpse of that in this other Zero Hedge article from back in December. It says, Trump effect, China's one-year yield crashes below 1% for the first time since the great financial crisis. Of course, we dig down toward the end. The best stuff's always buried at the end. It says this decline in yields is spurring debate about whether China's economy is heading toward a recession. Right. They've been in a recession, guys. The media, the news, mainstream corporate media is always so far behind on all these things. I think during the GFC, it was the collapse of Lehman Brothers in September 2008. They said, do you think there's a problem? Maybe we're in a recession. And we know with hindsight, the recession began at the latest in December 2007. There were all sorts of people talking about the real estate market had collapsed back in 2006, 2007. All through those years, and the media is like, oh, what? No, they're in a depression right now, not just heading toward a recession, in a depression. It says, especially if Trump's tariff threats become real and not just a negotiating tactic. There's some speculation interest rates may fall to zero, which, again, makes no economic sense in a free market world, if government efforts to bolster consumption and property demand continue to fall short. Well, it's not because of that. It's because the government would be buying the bonds, sending the debt down lower. No one's going to say, oh, I'll gladly lend you money for 0% interest. Nobody does that in a free market. So it's only the manipulation, the government manipulation, that causes 0% interest rates. Why does that matter? It says the nation's longer maturity yields dropped below their Japanese counterparts last month, and a sign investors are positioning for so-called Japanification of the world's second biggest economy. So what does that mean? Let's take a step back and think about If you're old like I am, you remember the 1980s, especially the late 1980s. Everyone looked around, well, Japan is going to take over the world. They were buying Manhattan real estate. They were buying golf courses in the United States. All sorts of products were made in Japan. The automotive industry was taken by storm by Japanese automakers. And so everybody's saying Japan is going to become the largest economy in the world. They're going to take over. They're going to surpass the United States. And then this epic bubble popped in their stock market and their real estate market in 1989. And it took until, I believe, last year when the Nikkei index finally reached those 1989 highs again before falling off. But they went into basically a deflationary spiral, and the way that they held that at bay was through all this stimulus. They took on government debt and they bailed out all the banks, they bailed out businesses, and then to keep their debt from running away and the interest on the debt from running away, they printed yen to buy the government debt to push the interest rates down so inflation wouldn't run rampant. And they've been stuck in this place for 25 years, but we've talked about they are now at a crossroads where no matter what happens, it ends very badly. We'll look at that. Well, let's look at that right now. So, let's go back to this right here. We talked about this back in August when we saw the largest two-day drop in Japanese stock market history, not long after it reached those 1989 highs yet again. We saw this drop off. We saw problems with the Japanese yen carry trade that made the headlines. And we talked about this is the beginning of the financial crisis. It may disappear from the headlines, but it has not gone away. And why is that? Because no matter what Japan does, it ends badly. They raise interest rates, they destroy their domestic economy. They lower interest rates, and they destroy their domestic economy. What this article here is saying is, well, China looks to be headed down the same road. So we have Japan, the fourth largest economy in the world, on the brink of epic collapse. It's just a matter of time. Now we see this deflationary spiral has taken hold in the second largest economy in the world, China, and they want to try to head down the same road that led to Japan being in this situation. We had the third largest economy in the world, Germany, also in the midst of a deflationary spiral. This is going to end badly, and I believe it's going to include a currency crisis, most likely starting with the Japanese yen, but it could be almost any major currency. But when you have the currency of the fourth largest economy in the world potentially hyperinflating away, being destroyed, it depends on which path of destruction they ultimately choose, right? Maybe they'll keep the currency and destroy the government debt market and the banks. My guess is they typically choose destruction of the currency. So we're probably going to see hyperinflation at some point in Japan, but first we're going to see deflation all around the globe, guys. That's where all of this is headed. We hear all the headlines about inflation. Deflation is what's coming. Now, that doesn't mean that prices across the board drop, but it means in all likelihood you'll see prices still remain high for the essentials like food and energy. And you're going to see anything that's discretionary, like a new car, really anything that you don't have to have now, you're going to see those prices start to fall in a deflationary spiral. But we're going to see a major collapse as this takes in. Continued volatility, debt will hit its limit. We're going to see bank runs all around the world, not just in the United States, where we have all these unrealized losses. Again, looked at this before. This is 08, 09, the great financial crisis, the situation the banks were in then in the United States. This is the situation they are in now. It is far worse. And then we're going to see a bank bail-in, which is going to frighten people and lead to bank runs. And then we will see a bank holiday as a result of that and the rollout of that new system. Guys, this is why all of this is important to pay attention to, because they've told us what they want that new system to be. Central bank digital currencies, tokenized assets, and digital IDs. They're testing all of these things. In some places, they've already rolled them out. These will be the solution, the new system that they put into place in the aftermath of the greatest financial crisis the world has ever seen, bigger than the Great Depression. Again, this won't be as long as the Great Depression in terms of duration. It's not going to last 10 years, but it's going to be as severe as the Great Depression. People will be in panic, and they will be clamoring for a solution to the problem that threatens to upend everything they've spent their life building financially. And the solution that's rolled out is going to be this digital solution: central bank digital currencies, tokenized assets, digital IDs. And that is a system indistinguishable in function and capability from the mark of the beast system we read about in Revelation chapter 13, verses 16 through 17. It is not the mark of the beast, because the mark of the beast requires the beast. It requires an antichrist. It comes in the midpoint of the tribulation. We are not in the tribulation right now. However, that system will be put in place ahead of time, as we're seeing now, as we're seeing this infrastructure being built. We're seeing the platform, the foundation of that mark of the beast system being built right now, right before our eyes. All they need to roll it out is a crisis, and then it's there in place for the Antichrist and the false prophet during the tribulation to simply flip a switch and turn that system on. Guys, all of this is coming. Hopefully you're prepared. Hopefully you know Jesus Christ. You've trusted Him. In Him, your life, your hope is in Him. Jesus said, if you trust in Him, if you believe in Him, if you build your life around Him, you are like the wise man who built his house on solid rock. Anything else you build your life on is like a man who builds his house on shifting sand. And when the storms of life come, and guys, there is one coming. If you're in China, you're in the middle of it right now. If you're in other places, it may not seem that way, but it's coming. That storm is coming. And those who have built their lives on anything other than Jesus are going to see everything swept away. So make sure you know Jesus. So guys, let me know what you think. Leave your comments below. You know, maybe you think that I'm just repeating the same thing over and over. I am, because we need to emphasize what matters. I could come up with new things all the time and say, oh, well, monkeypox is going to go rampant. That's not why this channel exists. I never mentioned monkeypox or any of these other things that I've seen the media try to use to scare people. We focus on the truth here. So this isn't fear-mongering. It's simply stating, this is what the data says. This is what history tells us. And the Bible tells us to look for these things. And when we see the mark of the beast system, that foundation being laid, and we see an oncoming economic storm that will most likely lead to the rollout of that system, that should give us pause as Christians, because Jesus said, when you begin to see all these things take place, know that I am near. I am right at the door. Your salvation draws near. So guys, if you built your life on Jesus, you have the blessed hope of His coming. He's coming for the church, the rapture of the church before the tribulation. He's coming at the end of the tribulation to establish His kingdom. Guys, we can be hopeful in all of those things. So let me know what you think. Leave your comments below. Make sure to hit the like, share, subscribe, and restack buttons. And God willing, I will see you on Friday. Bye. If you want to learn more about the end times and Bible prophecy, make sure to visit my Substack at brittgillette.substack.com. There you'll find my latest videos and articles, as well as notes, where I share the latest news headlines, the articles I'm reading, and the videos I'm watching. Subscribe for free, and each new post on Substack will be sent directly to your email. Just scroll to the bottom of the homepage and hit the subscribe button. As an added bonus, your first welcome email will include a link to a copy of my free ebook, 7 Signs of the End Times. Also, make sure to check out all of my books. Just look up Britt Gillette on Amazon, Barnes & Noble, Apple iBooks, Google Books, Kobo, or anywhere books are sold. Thanks for watching today, and until next time, keep your eyes fixed on Jesus, the author and perfecter of our faith.